Rivian stock's on a tear. It's up 17 or 18% today as we're recording this. It's up 24% this week. Most of the move is because of the big announcement that the joint venture that was on the table that we talked about over the summer with Volkswagen is happening.
When a company that's hurting for cash gets a giant injection of cash, the stock tends to move a lot.
Yeah, that's definitely happening. Its stock's still way down. Let's be honest about that. It's still way down, but the market is signaling something really positive here, and it definitely looks positive. We want to get into the details and talk about what VW and Rivian are doing, how it's good for Rivian, how it's maybe not everything people might think it is, but we'll get into the details and talk about that. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our special link. It's fool.com/unscripted. You can get access to the top 10 stocks to buy right now. Tyler, I'm going to screen share the press release. I'm probably going to sound familiar to people that follow Rivian closely if you've watched our videos talking about EV companies before. Because back in June, when the first announcement came out for the $5.8 billion, VW's potential $5.8 billion in investments in Rivian, we did a video because we kind of wanted to debunk a little bit about exactly what that meant, because it wasn't VW writing a check to Rivian for $5.8 billion. They did make an initial investment, but the biggest part of it was that they had agreed in principle to start a joint venture based on some stuff that needed to happen. Well, some stuff happened, Tyler. So the joint venture is going to happen. It's a big deal, right?
Yeah, it is. There's a great Wall Street Journal article that highlights the background going on here. But basically what ended up happening is you had Volkswagen, which is a good quality car maker, but probably not exactly the most nimble, agile, adaptive technology forward facing sort of company, right? Basically what ended up happening is when they announced this idea, Volkswagen was struggling with some of the tech stack stuff that is coming in these more modern company cars, remotely updatable software, things like that. Volkswagen couldn't figure it out, went to Rivian, and Rivian basically figured it out in like 3 months compared
Yep.
to what took years for Volkswagen to not quite ever figure out. Volkswagen was like, okay, th- Rivian's technology can do a lot for us. And Rivian is struggling to scale. This large cash infusion is going to be Lifeline might be a little too extreme, but it is a company that certainly needs the cash to make the changes to its operations that this, I think, will enable based on the structure of the deal.
I think you're right. I don't think it's fair to call this a lifeline, but Rivian is going to need that money at some point. And I think that's part of the reason they structured it the way that they did. I'm going to pull up on the screen the total deal size. We talked about this before, but I think we have a little more clarity on the joint venture is happening. They've picked the two co-CEOs. They identified key internal people at both companies that will work together on the joint venture to move it forward. So back in June, kind of the earnest money, I guess you could say, Tyler, was the $1 billion that VW invested in unsecured convertible notes. So this is basically debt that will convert into shares. And now that they've agreed to move forward with the JV, there's another 1.3 billion the VW is going to pay to Rivian in connection with the closing of the JV. 50-50 stake in the joint venture amongst the two companies, but Rivian needs cash. VW is one of the 2 or 3 largest automakers in the world. They have very solid cash flows, a strong balance sheet. They have the ability to spend money next year. Another investment, this is an equity investment. Again, we're talking about here, this was convertible notes. It's debt that can convert into stock. But starting this year, or excuse me, 2025, $1 billion investment no earlier than June at a 33% premium.
This is where it gets a little bit conditional because Volkswagen doesn't want to throw money at somebody that's just going to continue losing money. And part of the contingents is Volkswagen saying you have to have 2 consecutive quarters of gross profit, excluding this joint venture. So, like, your cars actually have to make money, can be as early as June 2025, but it says it has 5 years to do this. And I think that's important because I don't want people to assume, oh, yeah, they're getting another $1 billion in 9 months. This is a contingent $1 billion that is going to be required of Rivian to go from a company that is losing a lot of money on every car that it produces and showing that it can actually become a profitable business.
I want to highlight a couple things. Again, Rivian is expecting to do it this year. VW, this is very much a helping those that help themselves thing versus a lifeline. So Rivian has to demonstrate the ability. Again, gross profit, you don't have to worry about any of your operating costs or any of that stuff. They're just looking for gross profit. Another year and change from now, another $1 billion across two different tranches. And then in 2026, $1 billion loan. The point is that there are multiple ways for Rivian to earn more capital. They've got a graphic in here we're going to skip past because we've already talked about it. This is the organizational structure. They're going to be the co-CEOs. You have Rivian's chief software officer. This is really important, Tyler, because again, this is what VW needs help with. Rivian has spent billions of dollars to build some proprietary tech that they say is a competitive advantage. VW buys that. And well, they're literally going to be buying it through this JV from Volkswagen. You get somebody that knows how to make vehicles. You have people from the two companies with experience in their core competencies. Volkswagen's going into this with eyes wide open and not trying to encumber its partner. Through 2028, VW is going to bear the brunt of the expenses, 75% of the shared platform costs in the JV versus 25% for Rivian. The key thing here is it is a path forward that I think gives Volkswagen what it needs from Rivian and gives Rivian an ability to scale up in a way that is far less capital required for its business.
If this all works out as planned, it's a pretty good deal, I think, for both ends. Being able to put this kind of technology in Volkswagen's millions and millions of cars sold every year is very helpful, and this is going to give Rivian kind of that lifeline to get to scale to actually become a profitable operation. There are enough carrots there in front of it for it to happen.
All right, you're an investor. You're thinking about either of these two companies. Are you buying either of these based on what's going on?
The thing that gives me pause more than anything else, and we've discussed it before, the automotive industry, the brutal, brutal business. There hasn't been a lot of long-term value generated in this industry outside of Tesla. I think it's a little bit more of a prove it. I want to see Rivian get to this scale, and if it can get there, I'll dig a little bit harder. Unless something fundamentally changes, it's going to be you're going to have to really wow me as an investment.
It's tough because Tesla has set this gold standard for an automaker, the upstart, the disruptor. And it's been such a wonderfully winning investment. I think it set an unfair expectation for a lot of investors that are looking for a next Tesla or the next great automaker. I just want to share one screen here that I want to put context in this. $5.8 billion, $1 billion already invested. You're talking about $4.8 billion VW still has that it will potentially invest into Rivian. I want to compare those numbers in terms of what it represents compared to what Rivian is worth now. So the market cap, $12.8 billion. The market value of all of Rivian's stock as it trades as we're recording this. And $4.8 billion is a massive percentage of either of these numbers. So that's the market saying we still have a pretty high threshold for Rivian to be successful because we know it's going to get all this additional investment and dilution, and yet we're still going to value the stock where we're valuing it. So definitely prove it mode. A lot of work that needs to be done. And like you said, based on the history of the industry and the challenges that these companies continue to face, I would want to see a lot more evidence. Rivian vehicles on the road and good margins and generating cash flow before I would even want to consider investing in it.